Today, the subject is going to be taking you through a live recording of one of the trades that I've taken this week on Peloton. So it's going to be a short and sweet video trying to basically take you through the live recording on when I traded it, along with my TC2000 screen, explaining you the rationale behind the trade, how I ended up basically taking that trade, how I trade manage the position, always trying to make the content educational, trying to explain you why I do things, when I do things. In that particular trade, I use options. I don't necessarily trade options every time. I trade a mix of things. I trade everything that has some kind of momentum, that has some kind of activity and volume, that basically has the print of volatility. That's what we need as traders, day traders, or even like swing positioning traders. We need that volatility. Without volatility, there's no way that we can trade and make money in that market. But I want you to understand something, that options can be a great start for traders, especially the ones that don't have big accounts, but they can be also a double-edged sword in the sense that options are more difficult to trade than the regular stock, and I will explain you why. So your timing has to be almost perfectly right, as opposed to basically carrying that stock position. You have to be right also in terms of the volatility. The options is basically a derivative product of that single stocks. It is based on that underlying stock, but a lot of things go behind it in order to price that options. And one of which basically is the volatility of the underlying stock, which is also very key to the pricing of the option, whether you're going to get that option on the cheap or on the expensive side. I usually tell my students that it's better that you train on the underlying stock. Once you've got your process right, once you've got your timing right, once you understand your risk management, your money management, how you're going to basically position yourself and trade that position out, then I think you'll be ready for the options game. So anyhow, let me just basically shut down the camera now, take you through the live recording that day for the trade, and at the same time I'll be running my TC2000 platform to explain you the context of the trade and why I took that trade, and I'll see you right after. Enjoy it.
Okay, so this is the my TC2000 screen. Now you can see that I've got Peloton on that, and that's the daily chart of Peloton. So the way that we opened on that day, we had a gap up from Friday, and we opened with a gap opening of about 28% or so. This is sort of thing that we had in the morning. First, that stock was on the list of pre-market openers, the gappers. Okay, so, and there were quite a few news and things that came out, like news like Deutsche Bank thinks Peloton, stock is going to recover. There was like one of the analysts of Deutsche Bank that had a buy recommendation on that. Then some news about the rumors of an acquisition. So they were saying that basically there were like different companies that might be interested in the stock, like Nike, Amazon, Disney, Apple, all these guys basically ad suggested, or on the back of some analyst reports, etc., etc. I'm always a bit careful on these stock gappers, and I could definitely basically see that my sort of area where I would start becoming a lot more careful would be around the 38 area, around basically the conversions of all these Dunkin' channels, EMAs. That was my target. Now I want to show you something though, that when I looked at it on Monday morning, I tweeted something. That's what I tweeted, on that Monday morning. Up 26% after rumors of takeout, buyout interest. I wouldn't rush, and whatever you do, keep in mind that the first level of resistance around $38, is the most important thing that you keep in mind for your risk and reward ratio. So that's the sort of thing that I shared, and that's the reason why I was not about to rush. That being said, if we look at the overall, just pull up this weekly chart, so you can see that there was like this big area. There's a green area highlighted, that kind of corresponds to this area of consolidation where you had like a big activity of volume at price. Definitely we were in that area of bounce. So as a context, definitely Peloton looks ugly. Definitely Peloton has been in that downtrending movement where you have to basically think twice about pulling the trigger and getting back into it. But that's when we reach this area of support, of consolidation previously, when you know that there's a news catalyst in the morning and you see that gap up opening with volume accompanying it, when we knew that also on the next day. And let me just go back to the daily. We're that Monday the 7th of Feb, but on the next day they were supposed to release their earnings. When you know that there's been a lot of people that have been short that stock and there's a heavy short position on that thing, then there is something that you can build a case. There's a rationale for a trade and looking for an entry somewhere. But that being said, you got to be clear in your mind. We've got a almost 30% gap opening. You can't rush. You have to basically be a bit careful. And on that day, I was looking for, being patient, looking for that retreat, looking for that pullback movement, and then being able to pull that trigger, which is basically what we got. That's the 60 minutes here that you can see on the right hand side. That's the day when we open on Monday. We kind of pull back all the way to the MA10 and that area, and then that's when we open on that's when we open on Tuesday. So we had a good bounce, kind of reclaim almost by the close of Monday, the VWAP, and that's when we open on Tuesday. Looking at what happened on Tuesday, and that's sort of the news that we got. We had the earnings report. They announced appointment of new directors to the board. They announced a comprehensive program to reduce costs, drive the growth, profitability, blah, blah, blah. Okay, all these things are coming on top of what we'd seen the day before, the rumors, the indication of analysts basically going a bit more positive on the stock. So I had basically everything that kind of gathered around why I would basically position myself. I was looking for an entry. I thought that there was a good risk reward, especially if basically we were able to come back within that sort of area on a pullback. And given the fact that my sort of immediate area of resistance would be around the $38 mark. So my risk reward was pretty good, pretty well established. Looking for that pullback that I'd gotten. Unfortunately, on Tuesday morning, I had a series of phone calls, important phone calls that I had to go through, and I kind of missed out on the opening on that day, on that Tuesday morning, and even like further on during that day, I was not really basically able to be super, totally available. Again, I want to make sure that you guys understand, this is not the way that you should be trading. I mean, there's, some things, we all have things to be done. We have some priorities sometimes on some days. And the fact is that I really wanted to basically to take that trade. I wanted to have, to put in that trade on the back of that rationale I just explained you. That being said, I was not 100% available to really trade the way that I should be trading. I was kind of sloppy on my entry. I was kind of sloppy on my exit. Managed to basically, take that part of that trade that I was interested in, but when we trade, we have to definitely be focused, concentrated, try to shut down every sort of thing that can take our attention away from the market. But okay, on that day I couldn't do so. I mean, I had those important calls, and you have to deal with it. Anyhow, let me show you that that's the recording, my recording screen on that day, and as you see, like 17:01, that's my time. So I'm basically 7 hours forward. So 10:01 New York time. That's when I took basically my first shot. Paid 112 for 5 of these February 37 calls. Okay. First profit target that I hit was at 161 as a premium. So I took basically two calls out and kept 3 as the rest, the balance of the position. So I was writing that trade. So that was basically some of the orders that I was preparing in the market, in my order book. The idea was basically that, I had that move target around the $38, $39 target on the stock. Okay, so that's when I basically started getting rid of another two. So now I was left with only one call on in position, and the market basically kept on going. There was a strong run up through that levels in the stock that I had. At that point, basically, that's when I executed the last. You can see here. You can see it. That sold one at 360. Yeah. So 135% return on investment on that stock in about an hour and 30 minutes. Let me just get rid of that. Again, I was a bit sloppy on my exit on that. I could have done probably a lot better if I'd been concentrating on that. But if I had a bit more time to dedicate on that very specific day, this is the overall option, the 37 call. Keep in mind that these are weekly calls, so you have to be very quick because I took the trade on Tuesday, expiring on Friday, so the time decay can be extremely quick. And as you can see, even on that day, on that Tuesday, the stock, the premium closed around like $3.20, and then the next day opened down around $2, couldn't do anything, and then we ended up basically at zero. So you need to be very opportunistic on this trade. If I had been more focused on that trade and not focused on the call that I was in, I would probably have run up a little bit higher, getting my trailing stop, and probably I would have got out a little bit better. I'd say between $4 and $4.50. I would have definitely not reached that that high that we did on that stock, on that option at $5.07. But I think I would have basically my last profit target was at $3.60. I think I could have basically better than improved that by about, I'd say 40 to 60 cents. So okay, I'm not gonna cry over it. And it is what it is. I had an important thing to do. And again, when you trade these moves, you have to be disciplined the way that, I've been on that, waiting for that pullback, trading that thing, aiming at this area of resistance, which should be basically your area where you're gonna start exiting the whole position. The idea was a quick trade. The idea was a big movement on the back of the earnings, on the back of the announcement, on the back of the rumors, and that's it. And otherwise, if I'd basically wanted to play a longer swing trade, then I would have got for longer expiry options. Or I would have basically taken that trade on the stock itself. But I felt that, everything was gathered for a quick momentum move, and therefore, that's when you get the buck. That's when you're going to be able to really get that return on investment that you can get only on the option, and especially short expiry options.
I hope that you enjoyed that video. If you like it, just basically click that subscribe button. I'm not going to basically jam your email or jam your YouTube subscription. I always post 1 to 2 videos a week, and I think that's plenty enough. I'm trying to basically keep those videos short and sweet because no one likes to basically be dragged down to like a 40 or 60-minute video. So anyway, if you have any questions, address them in the comment section. If you basically want to know a little bit more about what we do, we've got some links as well in the descriptions. Any videos or any subject that you'd like to basically me to talk about, I'll be happy to review that and shoot a short video as well on that particular subject. But in the meantime, I'll let you go and enjoy the rest of your day. I'll see you very, very soon.